further ado, I'd like to introduce David Apple, who's the managing partner at Cherry Bekaert, and has been a friend to us for quite a while. So, David, you take it away.
I'm going to show my age as I start this. I don't know how many of you people remember Hogan's Heroes. Well, when we decided to do this, I felt like Corporal LeBeau when they said, "Who wants to be the moderator?" Everybody else stepped back. I was talking, and here I am.
First off, it's amazing to see 100 people out here this morning that came from Miami-Dade County and made it here before 8 o'clock. It's amazing. Farley Turner, middle market investment bank, focus on companies with $5 million or so cash flow on up to $20 million or so cash flow when the big banks start sniffing around deals and want to get involved. Focused on entrepreneur-owned companies and focused on client service. That's about it.
Doug Bodway. I'm the CFO of North Star Seafood, which is home of South Florida's precious seafood fisher market. Eat more seafood.
Hi, Ari Zur. I'm a partner with Rockaway Moran & Partners. We are a private equity firm, middle market focused private equity firm that specializes in partnering with management teams to build already successful companies into significantly larger and more diversified businesses. We've raised $1.3 billion of capital across 3 private equity funds, but focused on all of the same types of investments, which are strong companies with differentiated business models, attractive margins, with a growth orientation. That can be whether expansion of product and services, geographic coverage, footprint, or also through acquisition. We've made 26 investments across our 3 funds in the platforms, but we've done over 80 transactions as a number of our portfolio companies complete add-on acquisitions or tuck-in acquisitions after we invest. We currently have 7 platform companies in the portfolio that operate in the consumer, healthcare services, and education sectors, but also historically have focused on industrial businesses and aerospace and defense.
Thanks. Good morning, John Capel with Comvest Partners. Comvest Partners is a middle market investment firm. We actually have 2 different investment vehicles. We have what we call Comvest Capital, which is our debt investment vehicle. We lend anywhere from $10 to $100 million to primarily private businesses, primarily entrepreneurially owned. And then our other business is an equity business called Comvest Investment Partners. We make control equity investments of generally between $20 and $100 million into businesses. We focus on businesses, often where we think there's significant potential to improve profitability through any one of a variety of ways. And we'll do anything from deeply distressed companies that are EBITDA negative, all the way to good growth companies that are maybe not ready for true institutional ownership and need some help along the way. So.
Thank you, John.
Whatever it is, you're going to have a much better job of selling that, and you can probably, it's amazing what you can sell if you just tell people up front, and it's amazing how hard it is to make excuses about it when I find out about it that you didn't tell me. Because it's just, hey, in one sense you were honest, in the other sense, you're trying to hide something, and immediately on our side, as soon as I figure out you're trying to hide something, I wonder what else you're hiding.
The math is $100 million business, well, let's use round numbers, 75 of debt, 25 of equity, 20% of that is 5, right? So you guys, to John's point, the math is they just cashed for 100 and they rolled 5. And that's an extreme example with some pretty high leverage, but $5 million is not going to keep them chained to the desk, so to speak.
Explain what the difference is between a strategic or a financial buyer and why that has an impact on the value of the company.
Sure. A financial buyer can pay more than the strategic in certain circumstances, and strategic can obviously pay more than a financial in certain circumstances. What it comes down to most, I think, is the difference is the synergies. A strategic buyer is going to be looking at the business for how this fits with their company. And when they do that, they're going to have a lot of resources, a lot of infrastructure to leverage, and a lot of synergy.